Hello and welcome to an all new episode of Perspective right here on the CryptoCast Network. You guys are getting a 2-for-1 today. That's right, two perspectives in one day. So, of course, you guys can find us right here at the CryptoCast.network website, where you will see our YouTube channel, our iTunes link, our RSS, and our Twitter feed. And, of course, we have our merch store up there for you guys to check out some t-shirts with. And we do have a QR code and donation link displayed here because, of course, this channel is supported by viewers like you. And we're really just excited to have you guys on this journey here and starting this new network. We're almost to 1,000 subscribers now, so we're really proud of that. And we would just really appreciate it if you guys are new to hit the thumbs up and hit the subscribe button. And really would appreciate if you guys could give us a review in the iTunes store, as that really helps us get more views on the network. And of course, we are still doing our programming with Bitcoin.com workshop, this interactive 2-day workshop where we are teaching C# developers about the open source library called NBitcoin and teaching them about Bitcoin and how to integrate Bitcoin into their applications. And this is taught by both myself and the creator of the library, the NBitcoin library, Nicolas Doye. And we're trying to travel all around the country. So right now we got Las Vegas scheduled for September 1st. San Francisco, October 13th, and Seattle, November 3rd. And we really appreciate if you guys could check us out and let everybody know that, we're trying to get more developers aware of Bitcoin, get more developers working with Bitcoin. That is the goal of this workshop. Again, just to get not just C# developers, but raise awareness for Bitcoin too, because we're going to need a lot, guys, a lot of application developers working with Bitcoin to build out this ecosystem. And that's what we're trying to do, is get more developers working with Bitcoin. So with that out of the way, let's go ahead and stop the screen share and introduce our amazing guest today on Perspective. Of course, this guy, he's got a bunch of articles out there, and this is what the show is about, to try to give more description, more color, more information about some of the latest articles in the space. And we have with us, joining us this evening, Mr. Nic Carter. Nic, how you doing today?
I'm doing great. Thanks for having me on, Vortex. Really appreciate it.
Yeah, man, really, really glad to have you on. We've been going, of course, on Twitter for a while now. I retweet a lot of your stuff. You retweet a lot of insightful information. You've been around the space for a while. You, of course, run Coin Metrics, and so you have a lot of insights into the space as well. And so I think maybe that's where some of your knowledge comes from writing all of these articles, maybe a little bit. But why don't you go ahead and tell us, Nic, about yourself just a little bit, introduce the audience to yourself a little bit, and then we'll get right into the first article.
Yeah, so many of you will know a thing or two about me from my Twitter presence or my Mastodon presence. I'm phasing out of Twitter. I'm moving to Mastodon now. So if you're a Bitcoiner, come over to the Bitcoin Hackers instance. Yeah, so there's a lot to the story, but I wouldn't say I'm a long-time Bitcoiner. I'm sort of a relative neophyte, I would say. I only became a serious sort of advocate in maybe 2016, 17. Founded Coin Metrics in early 2017 to create open data interfaces for anybody that wanted to find out about blockchain data, essentially, for any of the major public blockchains. And wrote a master's thesis about crypto assets more generally. I was Fidelity's first blockchain analyst, or crypto asset research analyst, and recently started a venture fund, which will be focusing on infrastructure for public blockchains and startups building on top of them.
Very cool, Nic. And then, so that sounds great. So it sounds like you've been in the space for a while. This is what you kind of sort of live and breathe, is crypto. So maybe you can definitely give us some insights here. So we're really excited to talk about your first article. So let's go ahead and bring it up actually on the screen. I do have them up here, and I'd like the audience to take a look. So for the audio listeners, we are going to be talking about an article called "Media Coverage of Bitcoin is Still a Total Disaster." So, Nic, let me just ask you, what did you want to do with? Why did you start? Why did you actually write this article in the first place? And maybe tell the audience a little bit, like how did this first come about in your mind?
Yeah. So let me see. How did this article come about? I was reading the failing Washington Post, also known as Jeff Bezos's blog. And they had some hack on there writing some nonsense article about Bitcoin. And you kind of knew it was nonsense from the first sentence. And normally my strategy is to just ignore it. I think it was a Sunday, and I just got extremely triggered by this. I was fed up with the complete misinformation that is fed to the general public from journalists that really have very little insight over the subject matter that they're covering. And I made a calculated bet that I could basically outshout the journalist, right? So I figured, can I write something where the signal is stronger than the original? So I figured I'd do a play on their title of their article. And, I was gratified in that ultimately my guess is that my article got more attention than the original. And I consider that a victory, in that I was probably able to educate some people that might have otherwise been totally misled by the Washington Post.
Absolutely. And that's great. This is what we need. This is why blogs are so important and alternative media is so important, so that we can give a perspective on the mainstream media. So the mainstream media can't just be called right? Like, this is Washington Post. It's got to be truth, right? So I was really personally, I remember when this article came out not too long ago, August 11th. And, I just felt like this was being channeled, Nick, almost like from the whole community through you, Nick, because this is what it sort of felt like. This was almost felt like the whole community kind of shouting back at this crazy nonsense of some of this mainstream media articles. And some of the stuff, we understand that they just try to get views. They don't really do the research into the technology. And so I'm glad that there are people like yourself that are rebutting some of this craziness. And so this is really great to see. And so what the article does, what it goes over is, it goes over all of these different claims by this particular article. And so maybe, Nick, maybe we can just talk about a few of these claims here and go from there.
Yeah. So I really think the most egregious claim is this bucketing of Bitcoin into a preconceived sort of taxonomic category and then assessing it on that basis. Because essentially it's the classifying Bitcoin as what the journalist believes is a currency and then appraising it on that basis, right? I think Bitcoin is much broader than just a pure currency. I mean, I think we all understand that it's a protocol and a native unit of value, right? And, as a scarce unit, it's naturally volatile. And I think that the volatility is something that is absolutely inherent to a young financializing asset. And I see no problem with it, right? It's unnatural to have a zero volatility financial asset. That's just not how markets work. So I really felt that was the most egregious point in the article. You can't suppress volatility. And I'm a big acolyte of Nicholas Taleb, as I think many Bitcoiners are. And, I don't think risk is ever destroyed. It's just kind of deferred, right? So I view it as completely unsound from a market's perspective to desire a free floating asset, which is somehow absent of volatility.
Yeah, that's a great point. I mean, so they basically said that Bitcoin was too volatile, right? Too volatile to be a currency, or it's not stable. It's not like doing the one thing that it's designed to do. And of course, that's just completely absurd, as your article points out. I mean, this was designed from the beginning to be volatile in the beginning. It can't help but be because of the fixed amount. There is no way to, really to de-risk Bitcoin. And this is what has happened in the markets over the past 10 years, 20 years, is that people have just attempted to just remove all risk. Like, it's just nobody wants to take any risk anymore, it seems, in the markets. I mean, it's one thing to regulate, have one of the most regulated markets in the world, that, the New York Stock Exchange and Wall Street. And that's why we have some of the biggest markets. But at the same time, they've definitely gone a little bit too far. We've gone a little bit too far now, into the point to where we can just creating these crazy financial assets that just end up, destroying the country. And so that was the first one. I think that was the first big claim that was important, is to say that, that because Bitcoin is volatile, and we all know that Bitcoin's volatility has decreased over time. Like, if you look at the charts, it's going down. It is really going down. And so we fully expect it to be almost reduced to nothing once more liquidity actually gets put into the system. So 5, 10, 15 years from now, when Bitcoin is millions of dollars per coin, when if it succeeds that way, if it does become in fact one of the world's main store of values, then of course the value won't fluctuate as much. And so it's just some of these mainstream journalists, it feels like they do like zero research into these types of things. And that's why, of course, we have channels like this so that we can explain this and bring on our authors like yourself to be able to directly explain your articles and why you wrote them. So that's really great. Go ahead. Do you want to comment on that real quick?
Yeah, I mean, I think it's absurd to expect an asset class which is less than 10 years old to have levels of volatility which are, equivalent to that of gold or the USD or any established currencies. In maturity, it might have a much lower level of volatility. But, I consider it essentially a virtual commodity, right? A commodity money, right? Which could, potentially become a reserve asset. And if you look at commodities, they actually tend to be pretty volatile. So look at the price of oil, right? Oil is volatile, right? Bitcoin is in my view, it's kind of a utility, kind of like an electric company, right? It provisions a service that users want, which is rival and scarce, and demand for that service fluctuates over time. If there was a huge sovereign crisis tomorrow, demand for the Bitcoin utility would probably intensify. And if we had a period of placidity in sovereign monies, the demand for Bitcoin might decrease somewhat. And that's totally acceptable. And I think most Bitcoiners are prepared to weather that storm. That's just the trade-off that we accept in exchange for the sort of wealth insurance that it provides us, the unseizability, all those other attributes. So yeah, I mean, it's a very, very like basic level misunderstanding of the system, and one that I think any informed commentator should understand.
Absolutely. So with that aside, let's go with the second most, the second most crazy claim that this particular article that you're pointing out and refuting, because there was a lot of claims. I really encourage everybody to check out the article. Of course, all these links are in the show notes, but there's a number, there's like 15, 20 claims on there. So we're only going to go over a couple, but what do you think is the next one after that?
That's a good question.
Because, perhaps maybe, the manipulation.
Yeah,
so a pretty big one that people are talking about these days.
Yeah. So what's funny is there's this academia journalist complex which has emerged, kind of like the military-industrial complex. You have academics, and their currency is prestige and reputation, and journalists suffer from a scarcity of credible sources, so they're happy to defer to academics on topics that are, pretty complex, like, cryptocurrency. And so what you have is this class of academics that are craving portions of that attention economy. And that's precisely what we have with Tether now. The Tether paper that everyone quotes as firm evidence of manipulation, I think, displays a fairly unsound grasp of financial markets. And, I'm not a trader, but I did, do a graduate degree in quantitative finance, right? So I think a paper on Tether that doesn't contain the word arbitrage is probably not exactly the most authoritative source ever. But instead we have journalists at places like Bloomberg that will quote that completely uncritically. And that's a win for the academic because now their name's in the press, and that's a win for the journalist because their thought process terminates, and they don't need to worry about finding alternative views. They've confirmed their priors, right? So that's what happened with the Tether paper. Right now, the only evidence that would convince me of Tether's full unsoundness would be an enforcement action against Tether. Handcuffs. Perp walks, anything like that. And until then, everything we have is circumstantial. For sure, Tether may be a way of getting outside of KYC and AML restrictions. But I mean, that's what the entire industry is about. So it's weird to fixate on Tether. And honestly, I would say 95% of all criticism of Tether is probably concern trolling at this point. If you really want to target, the malfeasance in this industry, why don't you target the frickin' ICOs, which are, illicit and illegitimate as an entire class, and there's no uncertainty there, right? You can have 100% certainty that you're doing something good if you're targeting an unregistered securities race. So if you are going to be a critic of Tether, go ahead and criticize the rest of the illegality in the industry, please.
Absolutely. I mean, it is kind of crazy that there was a lot of fun about Tether over the past few months, especially running up to the big rally. And, of course, here we are again. The price is now down and Tether is still, printing, and the price was up. Tether was printing. And so, it seems to be that Tether might not be such big of an issue as we all maybe have thought. Now, of course, it's not the best solution, right? It's what we have right now. And I think that there'll be better solutions in the future, but it's what we have right now. Did you want to comment on that, Nick?
Yeah, it's an ugly hack, right? Yeah. But it's a counterparty asset. It works, right? It's a way to circulate value on ramp from the fiat system into the crypto system. It works just fine. It's probably fully backed. I can't attest to that personally, but that seems to be the case. Would love to see an audit, but I think it's unlikely that we get one. I really do believe that we have bigger problems than that. And I find it completely inconceivable that this whole market has been manipulated into existence. There is genuine demand for Bitcoin. And you can't just hand wave that away. And manipulation works on like 15-minute timelines. It doesn't work on yearly timelines. Bitcoin's been around for 9 years now, surpassed $150 billion in valuation. You can't ignore that as much as most of these people would like to.
Absolutely, absolutely. All right, so let's just move on to the final claim I think we're going to talk about here with this article, which is that the Bitcoin's deflationary characteristics mean that no one is going to use it. So, of course, this is a 100% Keynesian type of viewpoint, obviously, right? Because we got to have inflation, guys, or the whole world is gonna implode. Nobody's gonna spend. We're just gonna sit on couches and watch television all day, right? So, I think that I'd like you to better explain it, to the audience and such. But to me, it's just such an absurd notion, that because it's deflationary, nobody's going to ever spend it. And I think just the one point I'd like to make before I let you go ahead and say something is that, look, because Bitcoin has this finite supply, even though it's deflationary, it doesn't mean that somebody can just sit on their Bitcoin for the rest of their life, because guess what? They can't print any more Bitcoin. There is no way to get more Bitcoin. You cannot go find more Bitcoin in space or mine for more Bitcoin under the ocean. There's only ever going to be a certain amount of Bitcoin. So whether I have some, whether a person A has 1 coin and person B has 10 coins, person B might be able to extend themselves a little bit longer, but they still have to. They're going to run out. They're going to run out of that coin, and they're going to look just like everybody else in the system, have to work. Do something good to earn more coins. So this deflationary thing is so much better for society. Again, it just goes back to the Austrian economic school of thought. So of course, back to the Rothbard and Mises and this type of thinking. But I'll let you comment on what do you think this crazy absurd claim is based on and how you refuted it.
Yeah, actually, my view on that is that I low-key love that No Coiner's best line of attack against Bitcoin is to conceive of a situation in which Bitcoin has absorbed all of the world's wealth already. Because that shows that we've already won. It shows that we've already won because they're resigned to the fact. They're completely resigned to it. And I'm not sitting here telling you Bitcoin's can absorb all of the world's wealth. I mean, I think that's actually fairly unlikely. But I love that that's their best broadside attack against Bitcoin. My view on this is that I think it's unlikely that we have to deal with a fully deflationary world economy under a Bitcoin standard anytime soon. I think it's an asset that can complement other assets and challenge fiat currencies and maybe enforce better behavior on the part of central banks. That might be a little controversial among Bitcoiners. I think it's going to be a decades long struggle to financialize and incorporate this asset into our existing sort of financial systems, or better yet, build up a parallel system. But yeah, I think the deflationary problem is only those dynamics only occur if all trade and finance is denominated in that good, which is not only fairly unlikely, but it's also a long ways off. And I think that part of the critique there is that wages are sticky downwards because people don't like having their wages revised down if there is deflation. But my response to that is that we've never actually had a scarce asset like Bitcoin before in the history of the world. So this is an experiment, and there is no prior evidence to fall back on. So I'm a little bit surprised at this argument that people are certain that they know what's going to happen in a deflationary regime because there is no empirical evidence to fall back on. So for sure there are critiques of the deflationary characteristics, but there's no certainty there.
Right. And, I mean, the most certainty that we have is basically a gold standard. What happened under a gold standard? That's kind of the closest, right? That's the closest thing that we can compare to as far as society and what happens and, what society produces on a gold standard. And of course, if you read Safety's book, right, you'll see that we produced a whole lot of awesome stuff.
And the art was better.
The art was better. The music was better. Sort of everything. Look, I'm not. That's all subjective, but you can definitely clearly, for sure, look at the buildings. The buildings nowadays, of course, are all just sheetrock and just built at the cheapest way. Where of course buildings used to be meant to last. They used to be meant to last for hundreds and hundreds of years, and that's just not the case anymore. Again, people trying to just build something that lasts for the next 10 years because people are no longer thinking out very long, as Safety likes to call it, a time preference, right? People are no longer thinking 20, 100, 200 years out. They're only thinking about the next quarter, right?
I do like that Bitcoin is this flourishing cultural milieu of an intersection of a bunch of seemingly disparate views, such as obviously the stake thing, which is pretty pronounced, but also architecture revivalism. Which I definitely endorse. I live in Boston, where there's actually quite a good deal of older architecture, which I think is absolutely charming, and neighborhoods which have survived over the hundreds of years. So I'm definitely sympathetic to that view. It's just interesting that it's one that's shared by many Bitcoiners.
Right. I mean, this is what we see. We see that sound money touches all things, man. Like this is where we can all come together. This is why Bitcoin can amass such a huge tribe and such a huge following, because it just money touches everything. Sound money touches everything squared. Like pretty much, like sound money is something that is something that we can take it to the future for thousands of years. This concept, this idea, it's been going around. It's been studied for thousands of years. And, now we finally have the technology to actually produce the most sound money that we have the technology at this time to do. Like this is the next level. This is the triple accounting. This is, the global ledger. And this is the fifth abstraction of money. The actual most abstracted version of money we've ever had. But this is, in my opinion, what's going to power societies for the next 1,000 years. This is just the next version of gold. So I think that really I just want to close out maybe this particular talk of this article with something you said. Maybe I'm going to paraphrase a little here, but basically like what these journalists and in quotes and pundits do, like they just settle on this narrative. They come up with something that they think sounds sort of good, and of course it always usually has to be semi-controversial so they can get some views, and they just settle on this narrative, whatever it may be, whether Bitcoin is a poor economic system or whether Bitcoin is going to suck all the electricity from the entire world, so we have to shut it down right now. Whatever their narrative is for that day, they're going to just throw some various abstract arbitrary data points on there to confirm their view, and without doing almost any little to no research at all. Does that sound about right? Nick, I'll let you finish.
Yeah, I can confirm that. I actually, in my previous life, I worked as a journalist, right? And I think it's a problem of incentives. So the monetization, the financial model is just not there these days. There is not a sufficient subscriber base to keep long-form journalism alive. And so all of the talented journalists left for other pastures, many of them left for PR. And the ones that remain are in a completely different profession that doesn't resemble in the slightest the long form journalism that we had in decades past. Right now, you're optimizing for clicks, for short pieces. You can't afford a lot of fact checking. Editors basically don't exist anymore. There's no notion of accountability. Most of the big newspapers fired their ombudsmen, which are essentially the people that keep the news accountable to itself. So the mainstream media we have today is a beast that doesn't in the slightest bit resemble what it used to be. And I think it's absolutely okay to acknowledge that. And some of the most outspoken critics of the media will be people that are intimately involved in it and understand it deeply. And it's the people that understand it the best that are able to parse what has occurred. And the people that sort of thoughtlessly and mindlessly defend the vicissitudes of the media today are the ones that that don't pay much attention to the dynamics there. And in another 5 years, the major institutions like the New York Times and so on will be completely bankrupt if they don't continue being subsidized by various oligarchs who want to push a message. So these institutions are not credible anymore, and I think it's perfectly acceptable to acknowledge that and to build our own alternative institutions.
Absolutely. And that's what we're seeing. We're seeing the shift to Twitter. We're seeing the shift to YouTube. We're seeing the shift away from these mainstream media to a more direct approach, to a more one-to-one, to a more peer-to-peer type of approach, so where we can maybe follow a few people that we believe to be telling the truth or telling what they think is closest to the possible thing of truth, and we follow various people so we can cross-reference. And I think that right there is more research than any single regular journalist does at all right there. So that already beats mainstream media. But then of course you try to follow journalists that that do this for the passion, right? The journalists with history, journalists that aren't necessarily beholden to a larger institution like a New York Times or something like that, where they could perhaps maybe get in trouble, right? We like these independent journalists, that survive by the quality of their work. And this is and we're seeing this rise in Twitter and in YouTube. And I think it's great. I think more and more content creators are going to come into the space. And I think that we're going to get a far more clear picture of what's happening in the world, because what you have to do is you just have to unplug from the fire hose, people. Unplug from the fire hose that is the mainstream media, that is a new crisis every day trying to distract you, that is all of this security theater, all of this flooding of new technologies that can help people like Bitcoin. You have to unplug. And when you unplug, you'll find a whole new world. It's a whole new vibration out here outside of mainstream media. And I assure you, it is a far more joyous one, one with a lot more positivity. What do you think, Nick?
Totally agreed. I mean, I think what the media really wants to achieve is to fire those neural pathways in your brain which activate the stress reflex, right? They want to activate that fight or flight. They want to fire off the cortisol hormones in your body, because that's proven to be a very effective recipe for attention. And that's the monetization model today. So they want to paint the most dramatic and dangerous and destabilizing picture as possible, and they want to dramatize really everyday events and make it seem like there's an endless rigmarole of dramas out there. And really there isn't. And if you start ignoring the news, you realize that life is a lot more peaceful than it's portrayed as. And even if you listen to the most apocalyptic Bitcoiners and chaos-seeking ANCAPs, there's absolutely no need to suffer this permanent stress syndrome that many people get themselves caught up in if they're watching CNN every single day of their lives. There's just absolutely no need for that whatsoever.
Yeah, it's crazy. People just plopped up in front of CNN and Fox News all day yelling at the screen. I mean, that's not a world that you want to live in, I assure you guys. So let's I think we can wrap this particular one up. Let's move on to the next article. We could go all day dissing mainstream media. That's why I have my YouTube channel, and that's, I'm sure, why, Nick, you are on Twitter and why you write articles. And again, guys, you can follow. I have Nick's links in the show description, so please make sure to follow this guy. He knows what he's talking about. He's in the space. He's run several companies in the space. space. He's an entrepreneur, in the space. And so I definitely have been following him for a while. So I think he's got a lot of great stuff to say. So let's go ahead and move on to your next article here. We're actually doing these articles out of order. The first article that we just covered is actually older. We're going to do a newer, or is that vice versa, Nick? Which article is older? Yeah.
Yeah.
There you go. So now we're gonna do an older article here called "Visions of Bitcoin," and this was covered by a few different people in the space, like Stefan. He covered on his podcast. But so I want to maybe do a little bit different and a little bit different the way he did, because first I'm going to have you, Nick, like describe again like the intentions behind the article, what you wanted to achieve with the article, and then we'll go into a little bit more of the description. So go ahead.
Yeah, I wanted to insert a bit of nuance into the discussion around what the purpose of Bitcoin is. I think it's
Nick. Sorry, real quick. Let's just tell the audience the name of the article. I forgot to do that. Let's do that.
Oh yeah.
So real quick, the name of the article, guys, is "Visions of Bitcoin: How Major Bitcoin Narratives Changed Over Time," and this was written July 29th by Nick. Go ahead, Nick.
Yeah, so a brief comment. I mean, it wasn't just me. It was my co-author, Hasufly, who's chosen to remain pseudonymous. But he was an equal partner in that article. I couldn't have written it by myself. Myself and Hasu have worked on a lot of articles together, and he's a great co-author. So what we wanted to do there was take a historical look back. I love Bitcoin history. I think it's totally underappreciated. And when I retire, I'm going to become a Bitcoin historian, just trolling through the archives and the old Bitcoin talk posts. I just want to document the history of this insane movement, because to me, it is a historical moment. I really believe that we're living in an absolutely unprecedented time of liberation, of sort of balkanization, and a restoration of individual powers and a restoration of those asymmetries which protect individuals from the state. So I think historiography is tremendously important. And so the idea here was I wanted to take a look back and determine what people had considered Bitcoin to be over time. I wanted to acknowledge that there are warring factions within the same big tent. I wanted to try and delineate them. And I also wanted to make the point that I think we are at a point in harmony, relative harmony, considering some of the historical rancor that Bitcoin has suffered. And in the wake of the failed Bitcoin Cash fork, or Bcash fork, I think that Bitcoin itself is in a very good place. And that was a point I wanted to make, that some of that tension has resolved, and now is the time to build rather than argue.
Absolutely great points, Nick. Yep, I couldn't agree more. I believe that this is absolutely a time of harmony, because we just look back 1 year from now, and we were, of course, dealing with SegWit. We were dealing with the split of the chain, UASF. There you go. I mean, you got the hat right there, UASF. You'll find these hats all over the Bitcoin world. Of course, with Rodolfo and myself and Tone Vase and a bunch of other people. You'll find that we all have this hat because, again, they tried to, a whole mess of people tried to change Bitcoin, and the user said no. And so this is what we see in Bitcoin, is that the users sort of continue to win out time and time again. So let's maybe go through a couple of these narratives, Nick, and see what we see here. So I don't want to go through every single one, but basically the first one that the big one that was in the community in the very early days was just basically just a proof of concept, just to make sure that this thing worked. A lot of people in the beginning, I think, had a lot of proving to do to make this to actually even see that this thing works, like can even sustain a user base and even actually get a price. And so that was really interesting. We'll kind of blow past that one. But then the next one here is a pretty common one here. So this is the one that Roger, of course, tried to push, right? The cheap P2P payments network. So maybe you can go into a little bit about that particular narrative.
Yeah, I think it's a very seductive one and very easy to get caught in that trap. And I do believe it's a trap because I think it's a very reductive narrative. It's limited, right? Venmo is a cheap P2P payments network. Well, it may not be P2P, but it's a cheap payments network. And so is WeChat and Alipay and whatever Snapchat had integrated, and so is Square. So, you know, cheap payments are not something that are particularly difficult to instantiate, and we have plenty of those. The beauty is in the P2P basis and naturally the decentralization. And um, I don't think, if Bitcoin had been a mere P2P payments network, it would never have exerted itself meaningfully on the world. It would have always just been a footnote and a historical curiosity. I think it's a much more robust and interesting and enduring system. So that's why I think the cheap payments network narrative is somewhat misguided, and it's also kind of at odds with the other narratives because that's the kind of if you hold that belief, then you kind of want immediate scale, and that's when you start to compromise things like decentralization. But full disclosure, I was a big blocker. I think for 2 weeks or so, I decided that we needed to raise the block size, back in the day. And then I kind of realized that that was going to really compromise the ability to run a full node, which is the most essential and fundamental quality in the network.
Yeah, it's really interesting. This whole narrative of the cheap P2P payments, because it is absolutely at odds with a sound money. So, the Roger narrative, the BCH camp will tell you that, look, a currency is going to gain value by the ability to simply transact in it, by the ability to exchange it. And of course, that's not it, because we can exchange anything. I can exchange Beanie Babies with you if we want. That's not going to give it value, right? What's going to give it value first is the store of value. It has to become the money that you're using before it can become a medium of exchange, has to be a store of value. It has to be valuable. Somebody has to hold this stuff so that they can buy something tomorrow, right? Or next week or in a month. They have to be able to hold this, and so that they can believe that somebody else will want to hold this and that it is valuable, that they can use it another day. So it's just completely antithesis, counterproductive, opposite thinking of trying to think that you have a store of value by building a medium of exchange first. And that's just really always got me. It's just really strange. I did not think that, that it would get out of this control, but it is the nuance that really is important here. The nuance that block space is not free, and that it shouldn't be insanely cheap, because this is the base layer. This is the beginning of all of the layers that are going to be built on top. The internet is so many layers just in TCP/IP, and then you go down below that to the Ethernet, and it gets crazy. There's just 20, 30, 40 layers here that we're dealing with. And with Bitcoin, that's just the beginning of the next layer, the base layer. And we want to build many layers on top of that. So, to have the base layer, just to think of that it was going to be free and cheap transactions forever, is just a complete misunderstanding of the technology, I think. And I think that's what we've seen. I think that's what really drove that narrative. It's just a simple misunderstanding of how this technology works, because this is not easy to understand. And, there were some people that were trying to tell people that, look, this is going to affect Bitcoin in so many negative ways. Like you say, increasing the block size will reduce the ability to verify your own transactions. It can increase centralization because it requires more and more power to run these nodes. Just everything about it is bad. Like, there's no almost good things. And so I'm glad that now this is known, that BCH can split off and they can go with their own beliefs, which is that miners rule the network and that full nodes have no say. They forked off with that crazy narrative, and that's fine. So now that narrative is gone. So now we're in another narrative, Nick. So let's move on to the other narrative. Well, maybe you can comment. I'll let you comment on that first, and then we'll move into the next narrative. Go ahead.
Yeah, I think it does come down to time preference again. And the P2P payments, let's scale up now and just get adoption through tipping services and on-chain gambling and so on. That is a short time preference ideal. These are people that couldn't wait 5 years for the protocol that they desired to be instantiated. They wanted it right away. And they got that with Bitcoin Cash. And then ultimately, no one ended up using that, right? And you can look at the stats. Bitcoin Cash is valued at about 0.08 of Bitcoin, and its usage hovers not even proportionally that much. It actually trades at a premium to Bitcoin relative to its actual usage ratio, if you look at the on-chain data. So it was, I think, a firmly misguided view. And I'm not much of a computer scientist or anything, but when I looked into the way that networks scale, I understood that Bitcoin at the base layer is a broadcast network, and that's just frankly cannot scale to anything approaching a global level. And we need to introduce unicast functionalities, which I believe Lightning is, or perhaps Lightning will be the basis for other networks built atop it. We're probably not just going to have 2 layers. We'll probably have many more.
Absolutely, absolutely. Many layers. That's just how networks are built, guys. It requires many different layers because each layer has a very specific purpose, and then each one has their own specific purpose, but complement each other, and up the stack you go. So very, very cool. So I disagree here, Nick. I'm going to disagree with some of the ordering here of the next one. So the next 2 ones here, the next 2 narratives are digital gold and then private currency. Now, I think that we had the private currency part before the digital gold part because Silk Road came along long before the digital gold narrative in my mind. At least in the circles that I've read about. So let's talk about let's maybe skip the private currency because that wasn't a very large narrative, and now it's only held by, of course, ignorant people who don't understand how Bitcoin works. So we can probably skip that one. Let's go to the digital gold one because that's kind of the big one. That's one of the ones that I share that I believe that I'm trying to tell people, and how one of the ways that I describe Bitcoin, especially to new people into the space who don't quite understand this, saying that it is this digital gold, and specifically the censorship resistant digital gold, is really a fascinating thing to some people who are just coming into this cold. You tell them, you're like, what do you mean censorship resistant? You mean like I can actually donate this to WikiLeaks and nobody's going to stop me? And they just don't understand. They get really scared right away. They're like, you're telling me we can donate to WikiLeaks and we can buy weapons, and it's like, well, yes, you can. And if you couldn't do that, then it wouldn't be a money, right? It wouldn't be a money. And if you look, you can see that the money, the most powerful money we have in the world, the US dollar, is in fact used to buy some of the most horrific things in the planet. We're talking about weapons, drugs, and you can look at all the crazy campaigns and black ops and stuff that the US goes through with all of these 3-letter agencies. It gets really freaking crazy with with some of these things like oops, like my headphones came out here. But something like some of these operations that Obama did, bringing guns into Mexico and things like that. It's just crazy stuff. So let's go ahead, Nick, and have you comment on this this new narrative of this digital gold, and see. And let me ask you, while you're commenting on this, do you think that this is the main one that's going on right now?
Yeah, I think unequivocally that is the major narrative in Bitcoin today. And Hal Finney and Satoshi both made this analogy repeatedly, that Bitcoin is akin to a gold-like commodity in the digital space. So I felt that it was actually a fairly old narrative. It might be in the white paper and the early forum posts. Satoshi compares Bitcoin mining to gold mining, on the basis that it's costly, and that's the natural analogy, basically, is commodity mining. So yeah, I do think that is the predominant narrative today, with good reason. I think we all see it as we've come to see it as the base layer for essentially a settlement system. Maybe Bitcoin transactions themselves are expensive and unwieldy and maybe a little bit slow, relatively speaking, but compared to credit cards, I think they're pretty fast. And that's okay because, we're packing a huge amount of economic density into each single Bitcoin transaction. A Bitcoin transaction can encode literally billions of dollars of, relevant economic volume, and it can encode, 13,000 inputs or 3,000 outputs. So I would like to really disabuse the general public of the notion that a Bitcoin transaction is a single cash-like, petty cash transaction where you're trading $2 for a stick of gum. These things are like, freight tankers carrying huge, massive quantities of economic value. And you can pack all of that down into 350 bytes if you want. So I do see it as a and just an astoundingly efficient gold-like virtual commodity. And I think most of the Bitcoin world probably shares that view too.
Absolutely. I mean, this really is an amazing amount of value that you can store in a single coin, just unprecedented amounts of value in this digital asset that now anybody in the world can control. You know, again, this used to be, you know, the safe haven digital store, digital gold, you know, sort of thing was kind of only for the rich just a few years ago. It was only for the people who could, the billionaires who could launder, you know, bring their money to JP Morgan and say, hey, hide this in the Cayman Islands and, you know, for a certain percentage. This is now this digital gold, the store of value, this ability to actually store time is now available to anybody with an internet connection. You know, and as Safety likes to say, right, there's only two you know, finite things in this world, right? There's only two limited things, and that is, of course, time and Bitcoin. That's and now that we have Bitcoin, we can actually store time in Bitcoin. We can store time and energy and human capital in Bitcoin, and that's just never been able to do, never been able to have done so easily and so transparently before. Just direct capturing of energy produced into a digital asset class, and that is just pretty fascinating stuff for me to think about, and you know, and to try to tell people about, because it's hard to wrap your mind around it a little bit, you know, because again, we're just so used to copying files and copying images and all that kind of stuff. And you know, I was at a conference today that the economist, I forget his name, they call him Dr. Doom because he was actually one of the few economists.
Rubini or
Rubini, he was on the panel today with Tone Vase, and they were going at it a little bit about how Rubini was saying that you know, like Bitcoin's going to go to zero because it's centralized, it has no value, you know, there's only a few miners that control it. And it's so funny because it's just the nuance. It is, again, some of this nuance that is required to really get this, to really grasp this. It's like, yes, there's a few large mining pools, but of course, the nuance is that they're all made up of thousands and hundreds of thousands of individual miners. Like they can just switch. I think Tone Vase gave the equivalent of saying that because JP Morgan, right, owns accounts, it would be saying like JP Morgan represents 20% of the liquidity, you know, of the country. And of course it doesn't. It's individual people's accounts that they can choose to switch out anywhere, anytime that they want. So just all of this nuance is really important. This is why I try to bring this. This is what I try to bring with this show and with this channel is a little bit of nuance to some of these crazy claims, because again, some of these people, especially, I don't want to, you know, do some ageism in here, but you know, some of the older generations, they find it really difficult to grasp. And it's really important for us, especially the younger generations, to deliver this information, to deliver this nuance, to educate these people, because again, this is what's going to power the economy. The millennials have spoken. The world has spoken. The Bitcoin is now on a trajectory that essentially is going to go to zero or the world reserve currency. And so now is the time to decide. Now is the time to educate. And you know, I like to say this is the global financial renaissance that we're experiencing. And so let's share this renaissance with as many people, you know, as we can. So very important stuff. I'll let you comment real quick on that, Nick, and we'll go to the next one.
Yeah, I mean, you know, to play devil's advocate, in fairness to our ignorant no coiner counterparts, it's a fairly difficult system to grasp. And you know, I spent the last X many years of my life reading feverishly about Bitcoin, pretty much 24/7, to the detriment of my, you know, all of my personal relationships. And I still feel pretty stupid about it, and I'm still trying to learn. So
that's an important point. You know, we're all still learning. There are no experts. You know, as Mr. Hodel likes to say, a lot of people in the community like to say, there are no experts, right? There's only enthusiasts.
Yeah.
What do you think of that, Nick?
And the hallmark of a charlatan in this industry is someone that really poses themselves as an expert. And the only correct attribute here is humility. We don't really know the economic nature of the system. We haven't defined a good model of proof of work, or the security guarantees that it generates. We don't know what the appropriate security spend relative to network value is right now. All we have is empirical truths, which we're trying to retrofit some theoretical models onto. So it's troubling that we don't have formal axiomatic truths that we can lean on. But in the absence of that, we just have to be empiricists and understand that the system works as designed, and try to learn from it.
Absolutely. I mean, just look at the history, look at how it's working, consult developers, you know, and realize that you can't change Bitcoin. and that is okay, right? Realize that you don't understand Bitcoin, and that is okay. Of course, Jameson has that great article, right, on a CoinDesk. You don't understand Bitcoin, and that's okay. So definitely check that out. Shout out to Jameson Lopp, of course, former developer, lead developer at BitGo, now starting his own custody company. So very, very cool. Let's go to the final one here, which is the uncorrelated financial asset narrative, and maybe we after that, Nick, you can bounce from that directly into what you think maybe the next narrative will be for Bitcoin after the uncorrelated asset.
Yeah, so the uncorrelated asset's a fun one because, as I said, I come from a finance background too, and that is by far the easiest thing to grasp from anyone with a finance kind of perspective, because we're all taught in business school. Construct portfolios on the efficient frontier, search for zero or negative correlations with the rest of your portfolio, because those grant you a free lunch. Those grant you the reduction of idiosyncratic risk. And that allows you to push out onto the efficient frontier and build these amazing portfolios. So anyone in finance that finds a liquid asset class that is genuinely uncorrelated from the rest of the indices and commodities and currencies, that is the amazing holy grail of global macro. And that is, potentially what Bitcoin, may have been and may continue to be. My guess is that it will become more correlated with, some of these indices or commodity baskets as time goes on. It becomes more integrated into the financial system because it'll just be the major hedge funds and asset allocators that start trading it. So I think it will be more beholden to those financial, trade ones. But yeah, that's a very popular view, and it's a very easy way to sell it to finance people that may not care about the characteristics. I think it's also a little bit dangerous because many people who want exposure to the correlation properties don't care about the asset itself. They just care about the risk profile. And they may not necessarily want to take custody of the quote unquote physical asset. They may just want a piece of paper that roughly matches it. So I do think we have to be slightly vigilant of that one, although I don't buy into the conspiracies that the ETF will cause a bunch of unbacked claims to emerge. I just quite simply don't believe that.
Yeah, we don't want to get too much into the ETF rabbit hole, but I don't believe any of the negative narratives around that as well. Specifically with the fractional reserve and Caitlin Long's claims and things like that. You just simply can't rehypothecate Bitcoin like you can with gold, where the whole freaking planet is just paper gold at this point. Bitcoin is actually physically delivered assets through the internet that exist on hundreds and hundreds of exchanges across the planet with a huge underlying layer of hodlers of last resort. Maybe I'll just have you comment on that real quick, Nick. What do you think?
Yeah, one thing I'm excited about is proof of solvency or proof of reserves. You can cryptographically prove that you own some number of Bitcoins. So, and that's actually quite trivial, and that is something which is employed by a few exchanges. I don't think major ones today. I think maybe Kraken employs it. Yeah, so I think that's actually a kind of a trivial thing to prove, is that you are fully backed, or you're backed at whatever threshold you claim to be backed by. How maybe some exchanges are going to become more bank-like and become 70% reserve. I actually don't have a problem with that as long as they're transparent about it and consistent. I'm a believer in free markets, and if the free market wants, it can dictate a threshold that it's comfortable with. So that's probably where I differ again from a lot of Bitcoiners, and that I think Bitcoin banks will emerge, and I think they will be partially backed. But I think they'll also have a plausible method of proving their solvency and proving their reserves.
Yeah, it is interesting. A lot of Bitcoiners don't realize, and maybe I'll even catch some flack for this, but this seems logical to me. Like, look, banks aren't going to go away, guys. Banks are going to be here. What happened to all of the what happened to all of the phone companies in the 90s? They didn't go away. They became ISPs. And this is what I think exactly what will happen to banks, specifically central banks, is that they will simply become BSPs. They will become Bitcoin service providers. They will be able to do all sorts of interesting things for you, hold your hand for you, and be able to help you you do things if you really want that. Of course, all this will be able to be done by yourself. You won't actually need a bank. But again, a lot of people would like to have some kind of hand holding and retribution and a phone call, right? Somebody to call. And so that's still going to be there. People are still going to want that in various forms, in various ways. There's going to be different services. But the number one thing, guys, the number one thing that gives them power won't be there, right? Which is their ability to create money. And as Nick says, sure, maybe there will be some fractional reserves out there, but they're going to have to compete with the people that aren't fractional reserving. They're going to have to compete with the BSPs that aren't doing fractional reserve lending. In my opinion, I think that we'll see the BSPs that aren't fractionally reserve, aren't doing fractional reserve. I think they're going to do a lot better. I think they're going to do a lot more business. I think they're going to go. I think they're going to remain solvent longer. I think that they're going to, maybe even do interesting things like get the security better, just because the incentive is there, to actually store this sound money instead of trying to just do, more fiat, more derivatives, more fractional reserve. So I think I agree with you there, Nick. I think that banks aren't going to go away entirely. They're going to, just like the phone companies, get their power severely reduced, but still be there to provide various different services. And again, I'm okay with this because their main power will be taken away. Their main power that they've used for hundreds and thousands of years is to, create money, to create money, to lock up the rails. So to create money and to own the rails. This is the power that banks have used. Both gets taken away with crypto, specifically Bitcoin Lightning Network, right? Go ahead. I'll let you comment.
Yeah, I think, I probably have a fairly unique position among Bitcoiners in that I was privy to a lot of the conversations happening at these huge juggernaut institutions. I sat at Fidelity for a while and, talked about Bitcoin with all the internal teams there. Essentially these large institutions, no matter what they say outwardly, they see this as an asset. There's immense demand from their end users, from their customers, to trade the asset, to custody the asset, and the institutions want to cater to that. And in some form or other, they will eventually get around to doing that. The cycle is a little bit slow because there is perceived risk there, but ultimately this is inevitable. And if you plug your ears and pretend it's not happening, then you're not going to be prepared for when it does occur. So I think we just need to be prudent and accept that Bitcoin is going to be treated as a financial asset by large institutions that we may dislike, and absolutely be prepared for that eventuality and not consider it the end of the world. It's just the next evolution of this protocol.
Yep, absolutely. And, the proof of solvency, there were some exchanges, I thought, back in the day doing Merkle roots, just be able to prove at least a couple of their main hot wallets have the amount a couple of their cold wallets have the amount of liquidity that they say they do. This has been done before in the crypto community by a few different exchanges. Isn't that right? Somebody has done this before.
I think
so it's really that we know it's cryptographically possible, and it's not exactly. It's almost trivial. Not exactly, but almost.
Yeah, there's a protocol for it, without revealing whatever you don't want to reveal, right? And I believe there's a British exchange that might be doing it today. I'll look into that. I wish there was more demand for that. And I do think it's a really interesting take on the system because Bitcoin, people dislike the transparency of Bitcoin, but I think when it starts to be treated like an asset, a sort of central bank style asset or reserve asset, the transparency is also a benefit because it allows you to audit these, enormous unaccountable institutions. So in my view, that's actually, a boon and a positive.
Yep, absolutely. I mean, at least in the beginning, the transparency is going to be a huge boon for Bitcoin as it has. We are going to build more privacy into Bitcoin with various different techniques. Schnorr signatures is going to give us more privacy, all sorts of different confidential transactions. Of course, that's more farther down the road. But I mean, we're going to be building these things in there. And of course, we have interesting exotic technologies like, Chaumium coin joins. We just had the first coin join live on the mainnet transaction by Nopera, Adam Fiskor. at Nopera 73 with his Wasabi wallet. We 7 people joined the first live mainnet coin join transaction. So we're getting there. I think we're going to get there, and I think what's going to happen is it's going to be optional, so that large institutions, if we want them to, we can audit. And that's going to be great. And then, for more privacy transactions, for like just regular retail transactions, users will use like hidden wallets if they want to, Wasabi type wallets where their transactions are private. And so we're going to have the best of both worlds. And we look at something like Lightning Network, right, which is supposed to be just for scaling, but also for privacy. This is encrypted by default. No node knows what the hell is outside of the onion, right? They only know what's the next node they're going to pass it to. And so we gain in a huge amount of privacy with that. So I think privacy is coming to Bitcoin. There's just, again, all the nuance stuff, guys. There's a lot of ridiculous narratives out there. There's one that Bitcoin is completely transparent. There's one that Bitcoin is completely private. And again, guys, what it is, it's right now is something in between. It is transparent, but of course you can only see the numbers. They don't represent people. But we are going to fix this in the future. I think that there will be a lot more privacy on Bitcoin. And I just want to end this out with saying that, look, I think, Nic's main point here is that it is okay to have narratives change. This whole article about visions of Bitcoin, how these narratives change. It's okay to have these narratives change as long as, I think it's okay to have them change as long as the main properties of Bitcoin that make Bitcoin don't change, right? Such as the amount of limited value, as long as we still have the sound money, Austrian economic principles intact. I think we can continue to evolve Bitcoin into all sorts of things that we can't even imagine today. It's like, trying to imagine Facebook in 1995. It's really, really, really hard to imagine even Uber, like Uber in 1995. It's difficult, but this is how fast these technologies evolve. One day you wake up and everybody's got an iPhone. One day you wake up and a Bitcoin wallet will be built into everything, every device, every piece of hardware, every television, every phone, and all of this stuff. So it's coming, and it's going to be here faster than I think most realize. Again, my predictions are, Lightning Network fully integrated into the ecosystem within 18 months, Bitcoin being held by governments by 2024, like all this stuff is coming over the next couple of years. And again, like you say, Nic, it's just a shame that some people are too impatient to wait for this technology, and they want to go and create their own altcoin and their own crap coin instead to experiment and just fail anyway and get rich in the process. So that's the main reason. And that's the main reason why Bitcoin is decentralized and will never be stopped, because there is no, of course, visible founder to kick down the door in, and that's what makes it as Kevin Pham likes to say, that's what really makes Bitcoin decentralized, is having no leaders. So we'll just end it on that. Nic, I'll give you I'll give you the floor to go ahead and close us out to say your thoughts, and then we'll end it. So go ahead.
Well, I think that I should have you explain all of my articles, because I think you did a better job than me in the damn article. So I appreciate
you humble me, man. You humble me, Nic. You humble me.
I just want to thank you for having me on. I don't do a lot of shows. I told Marty that I would keep my supply of podcast appearances scarce, and so far I failed to uphold that promise. But this technically is not a podcast, so I'm not inflating the supply of podcast appearances.
But it is, Nic. We actually go to iTunes, RSS, audio, and everywhere. So we do push this out for our audio listeners. So we have so if you prefer to listen to this in audio format, we do supply that for you.
Well, yeah. Sorry, Marty. I'm going to keep inflating the supply. It's no longer provably scarce. I'm glad you had me on, and I'm glad that I have the chance. I'm continually humbled by the floor and the lectern that Bitcoiners give me. I consider myself a servant of Bitcoin. I think there's a great deal of humility in working for something that is bigger than yourself, and admitting that you cannot change it or control it or co-opt it. You have to let it exist on its own merits, and you can try and contribute in your own small way. And that's what I try and do through Coin Metrics, through my own writing, and through my fund. It's a three-barreled approach. And I am not trying to supplant Bitcoin. I don't think that we've hit on anything better. And I prefer a system where no one can perform seigniorage or allocate themselves for free any portion of the money supply. I think it's an extremely straightforward principle. Bitcoin isn't the only one. Of course, there's others like Monero, which are absolutely respectable, and that I'm a fan of, definitely. But there is a sublime humility in contributing to something that is far bigger than yourself, where you admit that you will never be able to create a better alternative. And I think it's only a matter of time until the rest of this community either leaves or accepts that reality.
Yep, absolutely. And it even says on my profile that I work for Bitcoin, and that's just been absolutely the sense. Of course, I only quit my day job last year, but in spirit, for the past 5 years, I've absolutely, in my opinion, worked for Bitcoin, trying to do everything I can for it. Whether that's through YouTube, right, through my videos, through Twitter, and then through the website. I guess that's my three-prong approach there, three-barrel approach. And so I think we're doing a good job because again, as Bitcoin Sign Guy likes to say, like I love to quote Bitcoin Sign Guy. He's like, we're all just trying to provide covering fire so Bitcoin can get out the door. And that after that it's done. After that, it'll be about as fun as talking about the dollar. But I thank you, Nic, so much, man, for coming on. We really, really appreciate it. Tell the audience, please, where can you find out more information about you?
Find me on Twitter, Nic__Carter, and that's Nic with no K. I don't believe in redundancy in hard C sounds, so that's just NIC. You can find me on Bitcoin Hackers Mastodon instance, NIC, that's the username. My fund's website is castleisland.vc, and the website that I co-founded is coinmetrics.io.
Awesome. Well, thanks again, Nic, so much for coming on. We really, really appreciate it. We'll hope to get you back again, because, as you can see what the show is, like we try to just give the people who write articles a little bit more of a free form, a little bit, maybe more of a long format, to try to describe the article. And we hope you had a good time here, Nic, and maybe we'll hope to give you back again when you write another article. So we thank you so much again, Nic, for being on the show. Especially, we know it's late your time. You look a little tired, Nic, so we're definitely going to let you go and get some sleep on the East Coast over there. So thanks again to everybody in the chat. We had a great time, and thanks to everybody who was here live. We really appreciate it. If you guys missed the show, please leave a comment below. Tell us what you think. Give us a thumbs up. We really appreciate it. If you guys are new, to the channel, please hit the subscribe button. We're trying to get to over 1,000 subscribers, and we're getting there. People seem to be liking the comments, so we hope you guys learned something today. And until next time, please, guys, keep talking Bitcoin, and we'll talk to you guys later. Bye bye.